Can XRP really hit $100? This is the million-dollar question that has sparked endless debates in the crypto world. Some believe XRP is on the verge of an explosive breakout, while others argue it's nothing more than wishful thinking. But here's the thing. There's actual data and real-world adoption that could make this scenario more than just hype. With institutions eyeing XRP for cross-border payments, a potential ETF on the horizon, and Japan's banking sector heavily investing in Ripple's technology, the pieces are falling into place. Yet, the road to $100 isn't without obstacles. Regulatory battles, competition from stablecoins, and the sheer market cap required raise serious questions. Welcome to the Chain Point channel. In this video, we'll break down the key factors that could push XRP to triple digits or prevent it from ever getting there. From Ripple's deepening ties with global banks to the risks that could derail its growth, we're uncovering the full picture. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. To hit the $100 milestone, XRP would need a staggering market cap of $5.7 trillion, surpassing Bitcoin's current valuation. While that might seem like a moonshot, history has shown that institutional adoption and market demand can drive crypto prices beyond expectations. Just look at Bitcoin's rise from a few cents to tens of thousands of dollars. One major factor in this equation is XRP's dominance in cross-border payments. The global financial system processes over $150 trillion annually, and Ripple's on-demand liquidity, ODL, is positioning XRP as a key player in this sector. If just a fraction of these transactions rely on XRP, its demand and value could skyrocket. Remember, adoption fuels liquidity, and liquidity fuels price growth. Institutional involvement is another game changer. If XRP gains mainstream recognition, especially through ETF approvals and regulatory clarity, it could attract massive investment inflows. Bitcoin and gold saw explosive price action after their ETFs launched. If the same happens with XRP, we could see price surges beyond previous all-time highs. But let's not ignore the risks. Unlike Bitcoin, XRP's centralized nature and its ties to Ripple's business decisions could impact investor confidence. Additionally, competition from stablecoins like USDC and CBDCs could limit XRP's dominance in the payment sector. A $100 price tag isn't just about market demand, it's also about securing a unique, irreplaceable role in the global economy. So, is $100 possible? The math suggests that XRP needs widespread institutional adoption, deep liquidity, and a massive increase in transaction volume. With Japan leading the charge and regulatory green lights on the horizon, XRP's future looks bright, but whether it reaches $100 remains the ultimate trillion-dollar question. Ripple's on-demand liquidity is aiming to disrupt one of the most entrenched financial systems in the world, SWIFT. Handling over $150 trillion in annual transactions, SWIFT has long been the backbone of global banking, but its slow and costly process leaves much to be desired. Ripple's ODL, powered by XRP as a bridge currency, offers near-instant settlement at a fraction of the cost. This efficiency is what could position Ripple as the future of cross-border payments. The key advantage of ODL is eliminating the need for pre-funded nostril accounts, which tie up trillions of dollars in capital across global banks. By leveraging XRP, financial institutions can transfer funds across borders in seconds rather than days. This not only speeds up transactions, but also frees up liquidity, making global trade more efficient. The question is, will banks abandon SWIFT in favor of Ripple's solution? Some already have. Major financial players, including SBI Holdings and several banks in Latin America and Asia, are actively using Ripple's technology. If institutions continue to adopt ODL at scale, it could unlock massive utility for XRP. Imagine a fraction of SWIFT's $150 trillion flow moving through Ripple. This alone could catapult SRP's market cap to unprecedented levels. However, the competition is fierce. SWIFT isn't sitting idle. They've introduced their own faster payments initiative, Swift GPI, to counter blockchain-based challengers. Additionally, central bank digital currencies, CBDCs, could offer alternative solutions, reducing the necessity for bridge assets like XRP. To secure its place, Ripple needs to prove its superiority in cost, speed, and regulatory clarity. While full-scale integration between Ripple and SWIFT remains uncertain, the potential is undeniable. If more institutions opt for Ripple's efficient system, XRP could become a dominant force in global finance. Japan has long been at the forefront of blockchain and crypto adoption, and XRP is no exception. With Ripple's deep ties to Japanese financial institutions, XRP is on track to become a major player in the country's banking sector. By 2025, an estimated 80% of Japanese banks are expected to use XRP for global payments. This level of institutional adoption could inject massive liquidity into the XRP ecosystem, potentially driving significant price appreciation. The foundation for this adoption was laid years ago. SBI Holdings, a major financial conglomerate in Japan, has been a strong advocate for Ripple and XRP, integrating the technology into its banking services. SBI even offers XRP rewards for shareholders, further embedding the asset into the country's financial infrastructure. With such institutional backing, XRP's role in Japan's financial sector is only set to grow. A major advantage of XRP in Japan is its ability to facilitate international remittances efficiently. Japan has a large expatriate workforce, and traditional cross-border transfers can be slow and expensive. XRP, with its near-instant settlements and low fees, provides a seamless alternative to traditional banking systems. As more banks integrate XRP into their payment networks, demand for the asset could increase exponentially. Regulation plays a crucial role in this expansion. Japan has one of the most crypto-friendly regulatory environments, recognizing XRP as a legal digital asset. This clarity gives financial institutions the confidence to adopt and utilize XRP without fear of sudden legal restrictions. Compared to markets like the US, where regulatory uncertainty still looms, Japan presents a much more stable ground for XRP's growth. If 80% of Japanese banks fully implement XRP for cross-border transactions, the ripple effect could extend beyond Japan. Other nations in Asia may follow suit, creating a domino effect of adoption. Will this momentum be enough to push XRP's price closer to the highly anticipated $100 mark? The approval of an XRP ETF could be a game changer, unlocking institutional investment at an unprecedented scale. We've seen how Bitcoin and gold reacted when their ETFs hit the market: massive capital inflows, increased mainstream adoption, and most importantly, significant price appreciation. If XRP follows a similar trajectory, its price could surge beyond expectations, potentially fueling its journey toward $100. Institutional investors have largely stayed on the sidelines due to regulatory uncertainty. However, an XRP ETF would provide a regulated and accessible way for hedge funds, pension funds, and retail investors to gain exposure without dealing with the complexities of self-custody. This shift in accessibility could create sustained demand, driving liquidity and reducing volatility in XRP's price movements. Another critical factor is market psychology. When an asset is legitimized through an ETF, it signals confidence to the broader financial market. Bitcoin's market cap skyrocketed after ETF approvals, and gold saw massive gains in the early 2000s when its ETFs launched. If XRP receives similar recognition, the influx of institutional capital could fundamentally alter its market dynamics. However, it's important to note that an ETF approval doesn't automatically guarantee a price surge. Ethereum's ETF approval, for example, failed to drive a significant price increase, showing that market conditions, demand, and investor sentiment play a crucial role. Just because an asset becomes available through an ETF doesn't mean institutions will immediately rush in, especially if there are lingering regulatory concerns or competing investment opportunities. The XRP ledger, XRPO, is one of the most efficient and scalable blockchain networks in existence, processing up to 1,500 transactions per second with settlement times of just 3 to 5 seconds. Unlike Bitcoin and Ethereum, which rely on energy-intensive mining, XRPL operates on a consensus mechanism that keeps costs low. Transactions cost as little as $0.00. This makes it an ideal choice for large-scale financial applications where speed and affordability are crucial. One of XRPL's standout features is its built-in decentralized exchange, DEX, which allows users to trade assets directly on the ledger without intermediaries. This eliminates the need for centralized exchanges, reducing counterparty risk and enhancing liquidity. As more assets tokenize on XRPL, its DEX could become a key player in the evolving world of DeFi. Beyond payments and trading, XRPL is also designed to support smart contracts and tokenized assets. Developers can issue custom tokens and create advanced financial instruments directly on the ledger. With the rise of stablecoins and tokenized real-world assets, XRPL's infrastructure is well positioned to play a major role in the future of finance. Despite its advantages, XRPL faces challenges, including competition from other high-performance blockchains like Solana and Avalanche. However, its deep integration with Ripple's payment solutions, along with its growing adoption in banking and finance, gives it a strong competitive edge. As institutional interest in blockchain technology grows, XRPL's capabilities could become even more relevant in global finance. Ripple's upcoming stablecoin Real USD could play a crucial role in the XRP ecosystem, particularly within on-demand liquidity oil solutions. While XRP is designed as a bridge currency for cross-border payments, a stablecoin pegged to the US dollar could complement its function by providing stability in volatile market conditions. This dual asset approach could make Ripple's payment network even more attractive to financial institutions. One major benefit of a Ripple-backed stablecoin is its seamless integration with the XRP ledger, XRPL. Unlike third-party stablecoins like USDT or USDC, which operate on multiple blockchains, Real USD would be natively supported by XRPL. This would allow for ultra-fast transactions, near-zero fees, and deep liquidity, further strengthening the network's overall utility. Another advantage is regulatory compliance. Ripple has been actively engaging with regulators to ensure that its stablecoin meets financial standards, reducing the risk of legal hurdles that have affected competitors. Given the increasing scrutiny on stablecoins from governments worldwide, having a fully compliant and transparent digital dollar could give Ripple a major competitive edge. Beyond cross-border payments, Real USD could expand into decentralized finance, DeFi applications on XRPL. Stablecoins are essential for lending, borrowing, and yield farming, and having a native stablecoin could attract more developers and liquidity providers to the XRPL ecosystem. This in turn could drive more adoption of both XRP and the ledger's financial products. The real question is how Real USD will coexist with XRP. If implemented correctly, it could enhance XRP's use cases rather than compete with them. By providing a stable medium of exchange alongside XRP's role as a bridge asset, Ripple could create one of the most efficient financial ecosystems in the crypto space. Regulatory clarity has always been one of the biggest hurdles for XRP's mainstream adoption, but recent policy developments could change everything. One major point of discussion is the potential inclusion of XRP in a U.S. sovereign wealth fund, which would mark a significant shift in how digital assets are viewed by governments. If such a move were to happen, it would solidify XRP's position as a legitimate financial instrument rather than just another cryptocurrency. Another critical factor is XRP's compliance with ISO 20022, the global standard for financial messaging. This standard is set to replace outdated banking communication systems, making transactions more efficient and interoperable across global markets. With XRP already aligned with ISO 200, it is well positioned to integrate seamlessly into the future financial system, potentially driving widespread institutional adoption. Government-backed digital assets are also emerging as a key trend, and XRP could play a role in this shift. While central banks are developing their own digital currencies, CBDCs, Ripple has positioned itself as a bridge between traditional finance and blockchain technology. If governments recognize XRP's utility as a settlement asset, it could become an essential part of international payment infrastructure. Despite these promising developments, regulatory uncertainty still looms. The SEC's ongoing legal battles with Ripple have left some institutions hesitant to fully commit to XRP. However, as more jurisdictions clarify their stance on digital assets, XRP could benefit from clearer guidelines that encourage institutional participation. Countries like Japan and the UAE have already embraced Ripple's technology, setting a precedent for others to follow. While the potential for XRP to reach $100 is exciting, investors must also consider the risks. One of the biggest concerns is the reliance on speculative assumptions. Mass adoption and institutional investment are not guaranteed. Even if XRP gains traction, the timeline for large-scale integration could take years, delaying any significant price appreciation. Optimistic projections don't always align with market realities. Another risk is centralization. Unlike Bitcoin, which operates as a fully decentralized network, XRP's development and distribution are closely tied to Ripple. This has led to concerns that Ripple holds too much control over the ecosystem, and large token sales by the company could impact price stability. While Ripple is taking steps to address these concerns, the debate over XRP's decentralization remains a key issue among investors. Competition is another major challenge. Stablecoins like USDC and USDT already dominate cross-border transactions in the crypto space, offering fast and stable alternatives to XRP. Additionally, central bank digital currencies could further reduce the need for bridge assets like XRP. If financial institutions find other solutions that meet their needs, XRP's adoption could slow down. Regulatory uncertainty is perhaps the most critical risk. The SEC's lawsuit against Ripple has already caused setbacks, and future regulatory actions could impact XRP's market position. While some countries, like Japan, have provided clarity, other major markets remain uncertain. If XRP is classified as a security in key jurisdictions, it could face significant restrictions that limit its growth. Finally, market dynamics and sentiment play a huge role. Even with strong fundamentals, XRP's price will still be influenced by overall crypto market trends. If investor confidence in the broader crypto industry declines, XRP could struggle to gain momentum. The path to $100 is possible, but filled with challenges that must be carefully navigated. So, can XRP really hit $100? The potential is there, but it all comes down to adoption, regulation, and market demand. We've seen how Ripple's technology is being embraced by banks, how the XRP ledger offers real utility, and how an ETF could bring institutional money into the mix. But at the same time, regulatory hurdles, competition from stablecoins, and market sentiment could slow things down. One thing is clear. XRP's future isn't just about speculation, it's about real-world integration, and that's exactly what Ripple is working toward. Whether or not we see triple digits, the next few years will be critical for XRP's long-term value. Will it become a major force in global finance or struggle to maintain its relevance? Now, I want to hear from you. Do you think XRP will hit $100, or are these price predictions too optimistic? Drop a comment below with your thoughts. And if you enjoyed this deep dive, don't forget to like this video and subscribe for more crypto insights every week. Thank you for watching this, and I'll see you in the next video.